Time now for an in-depth look at the market news, and for that, I'm joined on the line by Mr. Daniel Yu, global strategist at Yuanta Securities. Mr. Yu, thank you for coming on today.
Thank you for having me today.
Well, Fed Chairman Jerome Powell overnight testified before Congress, and his remarks about the U.S. economy were fairly positive. Of course, there's still uncertainty when it comes to trade with China, but with that in mind, how are the stock markets looking today?
Sure. If you look at what Fed Chairman Jerome Powell have said in the Congress on Wednesday, is that the policy is to hold the current rate into the future unless there's some meaningful changes in the outlook. Powell said that policy isn't on a preset course, but officials think the 3 rate cuts are enough of an insurance policy against the downside risk. So most likely the economic growth rate should be fairly stabilized in the future. Based on our analysis, the economy seems to be fairly stable. U.S. economic growth rate will be probably most likely at around 12% rate. And most of the inflation numbers that are coming out is under check. It is slightly higher than expected, but nevertheless, we are seeing core inflation going down from 2.4% to 2.3%, and overall inflation is at below 2% target. So that is indicating that the economies will be fairly stable in the future. Accordingly, the equity market did okay. It really hasn't taken off yet, but nevertheless, it's fairly stable. Dow was up 0.33%, S&P 500 was up 0.07%, Nasdaq was slightly down by 0.05%.
Well, let's zero in on Hong Kong for a minute. Stocks there have not fared as well as other markets this year, to say the least, with the protests now going on for 6 months. What's the story in Hong Kong, and what's your outlook?
Sure. As you said, Hang Seng Index have shown quite significant drop in the past. And yesterday, it dropped the most by 2.6%. It is the worst single-day percentage decline since the beginning of August. And again, today, it is down around 1% territories. Clearly, the news about the continuation of the long-running protest is putting a dent to the economic growth rate of the Hong Kong. And if you talk about the overall, there has been actually firing 2 rounds to the protesters, and the protester had to have surgeries, and he's in critical conditions. The hospital authority have said that. So there's a concern about this would affect negatively in terms of the economic growth rate of Hong Kong. Of course, Hang Seng Index will be the biggest underperformer according to this type of news flows. We don't see this issue settling down anytime soon, so we do think that the volatility should continue. The volatility will remain to be high until some kind of support comes up from the Chinese government to support the overall Hong Kong economy. And if that's the case, then Hong Kong index should start to go up again. But at the current point in time, we don't see anything that happening anytime soon.
Got it. Well, meanwhile, according to the Bank of Korea, the country's exports in October were fetching lower prices for a second month in a row. Why is that, and what stands out to you about this situation?
Well, clearly, it is because of the global economic growth rate slowing down due to the various trade barriers and trade negotiation and higher tariffs. If you look at the Korea's export prices, it has dropped a second consecutive month in October because of the Korean won appreciations against the U.S. dollars, as well as the overall demand seems to be slowing down somewhat. But interestingly, if you look at the export price decline, the biggest decline comes from the farm products, which tumbled by 3.9% over the cited period, while actually the manufacturing goods dipped only 1.9%. So, which means is that still the competitiveness in the manufacturing industry still remains to be fairly reasonable. Most important thing would be in the future is what's going to happen to the DRAM price and the NAND price. Because of the semiconductor business is a very large part of the Korea's export. The semiconductor index, DXI, showing a decline trend even still in the past several months after a sharp recovery in July. So clearly still there is a lack of demand that's happening at this point in time. But in the future, we do expect the continuous data demand coming from the data center as well as the AI industry jumping quite significantly in terms of the growth. So all that would affect positively in terms of DRAM price. That should have positive implications for the overall export prices in the future.
All right, Mr. Yu, we'll have to leave it there for today. Thanks so much for coming on. We appreciate your analysis.
Thank you very much.